In 1956, a quiet man from Omaha started a small investment partnership with just $105,000. Most of that money wasn't even his. He personally contributed only $100. But within a few years, that small partnership would turn him into a millionaire, and eventually one of the richest people on earth. That man was Warren Buffett. Today, he is known as the Oracle of Omaha and one of the greatest investors in history. But his journey to his first $1 million didn't start with Wall Street. It started when he was just 11 years old. That was the age when Warren Buffett bought his very first stock. He purchased 3 shares of Citi's Service Preferred for $38 each. But right after he bought the stock, the price dropped. It fell from $38 to $27. For most kids, that would have been terrifying. But Buffett held on. Eventually, the stock climbed back to $40, and he sold it, making a small profit. At the time, he felt proud. But shortly after he sold, the stock skyrocketed to over $200. That moment taught him a lesson he would never forget. The biggest money in investing is made by being patient. That single experience shaped his entire investment philosophy. Years later, after graduating from Columbia University, Buffett began working on Wall Street. But he hated the corporate culture. He didn't want to work for someone else. So in 1956, he went back to Omaha and launched something called the Buffett Partnership. He convinced friends and family to invest with him. Instead of charging normal fees like most fund managers, Buffett created a unique deal. If the partnership made profits above a certain level, he would take a percentage. If it didn't, he earned nothing. This meant he only made money when his investors made money. It was a bold strategy that built massive trust. Buffett started applying the investing principles he learned from his mentor, Benjamin Graham. He looked for companies that were undervalued, businesses that the market had ignored, companies trading for less than they were truly worth. This strategy is called value investing, and Buffett became exceptionally good at it. Year after year, the partnership generated incredible returns. While the stock market averaged around 10% annually, Buffett was producing returns close to 30%. That kind of performance was unheard of. Money started pouring into the partnership. Investors trusted him because he was disciplined. He didn't follow hype. He didn't chase trends. He only bought businesses that made logical financial sense. By the early 1960s, the partnership's assets had grown dramatically, and Warren Buffett's personal wealth crossed an important milestone. He became a millionaire. But the real turning point came when Buffett started buying shares of a struggling textile company. The company was called Berkshire Hathaway. At the time, it was a failing business. Most investors ignored it, but Buffett saw something different. He realized the company could be used as an investment vehicle, so he began buying more and more shares until he eventually took control. Over time, he transformed Berkshire Hathaway from a dying textile company into one of the most powerful investment companies in the world. Through Berkshire Hathaway, Buffett invested in legendary companies like Coca-Cola, American Express, and Apple, and those investments multiplied his wealth far beyond his first $1 million. But the most interesting part of Buffett's story is this. His success didn't come from complex trading strategies. It came from simple principles: patience, discipline, and rational thinking. Buffett once said that the stock market is a device for transferring money from the impatient to the patient. That philosophy helped him turn a $100 personal investment into billions of dollars. And it all started with one small partnership in Omaha. The lesson from Warren Buffett's first million is simple. You don't need to predict the future to build wealth. You just need patience, discipline, and the courage to think differently from the crowd. Because sometimes the biggest fortunes in history start with the smallest investments.